Welcome back to the news in detail. We start off with the UN Trade and Development, which has projected global economic growth as stagnating at 2.7% in 2024 and 2025, a notable decline from the 3% average between 2011 and 2019, and well below the pre-2008 average of 4.4%. The Trade and Development Report emphasizes that this low normal growth is inadequate for addressing urgent development and climate goals, while the Global South enjoyed robust growth rates of 6.6% from 2003 to 2013. This has dropped to 4.1% over the past decade. Excluding China, the average growth rate in the Global South has been just 2.8% over the last 10 years. In Europe, a preliminary flash estimate from Eurostat, the European Union Statistical Office, shows that seasonally adjusted GDP rose by 0.4% in the euro area and by 0.3% in the European Union in the third quarter of 2024 compared to the previous quarter. In the second quarter of 2024, GDP increased by 0.2% in the euro area and 0.3% in the European Union. Seasonally adjusted annual GDP grew by 0.9% in both the euro area and the European Union in the third quarter, up from increases of 0.6% in the euro area and 0.8% in the European Union in the previous quarter. Ireland saw the largest increase, followed by Lithuania and Spain. Overall, 7 countries reported positive year-on-year growth rates, while 6 experienced negative growth. French economic growth has outpaced estimates, accelerating by 0.4% in the third quarter of 2024, up from 0.2% in the second quarter. The National Institute of Statistics and Economic Studies reported that the boost in growth is attributed to an influx of tourists for the Paris Olympics, which enhanced consumer spending in the Eurozone's second largest economy, resulting in a 0.5% growth for the third quarter after a flat performance in the previous quarter. Preliminary data has indicated that Italy's gross domestic product stagnated in the third quarter compared to the previous 3 months, falling short of expectations and raising concerns about growth prospects for the Eurozone's third largest economy. According to the Italian National Institute of Statistics, GDP grew by 0.4% year-on-year. The United Kingdom's new Finance Minister Rachel Reeves has announced the biggest tax increases in 3 decades in her first budget. Reeves said she would raise taxes by 40 billion British pounds a year to cover a 22 billion British pound shortfall. Citing the latest projections from the Office for Budget Responsibility, Reeves said that the UK economy is forecast to grow by 2% in 2025, while businesses will see a rise in national insurance contributions by 1.2% starting in April 2025. Additionally, the government plans to catalyze 70 billion British pounds of investment through a national wealth fund and raise taxes on private jet flights by up to 50%.
Compensation schemes that they did not fund, and their failure to assess the scale of the challenges facing our public services means.
In Germany, the Federal Labor Office figures showed that the number of unemployed people rose more than expected in October. The office said the number of unemployed increased by 27,000 in seasonally adjusted terms to 2.86 million. The seasonally adjusted job rate remained stable at 6.1%. According to Andrea Nahels, the head of the Labor Office, the anticipated improvement in the labor market in autumn has not occurred this year. U.S. job openings fell sharply in August, reaching their lowest point since January 2021, indicating a slowdown in the labor market. However, the number of vacancies remains significantly higher than pre-pandemic levels. According to the Labor Department, job openings decreased to 7.4 million in September, down from 7.9 million in August. The decline was particularly evident in the healthcare sector and among government agencies at the federal, state, and local levels. Layoffs also increased, while the number of Americans quitting their jobs dropped to below 3.1 million, the lowest since August 2020. The Republican presidential candidate Donald Trump has stated during a campaign rally in Allentown that the United States may impose tariffs of up to 200% on China or any other country to protect the economy. Trump emphasized his commitment to focusing on economic growth and making the United States the largest manufacturing hub in the world. He expressed his vision of restoring the U.S. as a great power and pledged to work on lowering oil and gas prices within the first year of his presidency.
It's amazing, a floating hospital, the biggest in the world. I will deliver the best future for Puerto Ricans and for Hispanic Americans. Today, I want America.
The U.S. economy continued to grow steadily in the third quarter, with declining inflation and wage increases driving consumer spending. The Commerce Department's Bureau of Economic Analysis said that the United States gross domestic product increased at a 2.8% annualized rate last quarter in its advanced estimate of third quarter GDP. The economy grew at a 3.0% pace in the second quarter. The pace of growth was well above what Federal Reserve officials regard as the non-inflationary growth rate of around 1.8%. Single-family house prices in the U.S. rose due to ongoing tight supply in August. Elevated mortgage rates are also contributing to keeping potential buyers on the sidelines. The Federal Housing Finance Agency said house prices rose 0.3% on a month-on-month basis after gaining 0.2% in July. They increased 4.2% in the 12th month through August after an upwardly revised 4.7% advance in July. The rise in annual house prices was previously reported to have been 4.5%. We stay in the United States, where consumer confidence rose to a 9-month high in October, reflecting improved perceptions of the labor market. The Conference Board reported that its Consumer Confidence Index increased to 108.7, up from a revised 99.2 in September. Economists had expected a rise to 99.5 from the previously reported 98.7. Dana Peterson, chief economist at the Conference Board, noted that while this marks the strongest monthly gain since March 2021, the index remains within the narrow range it has occupied for the past 2 years. Moving to Asia, logistics data from the China Federation of Logistics and Purchasing for the first 3 quarters of this year shows steady growth in import logistics and strong consumer demand. Social logistics rose 5.6% year-on-year to 258.2 trillion yuan from January to September. Import logistics grew by 4.2%, supported by stable industrial production and increased imports of coal, natural gas, and iron ore. Innovative business models in the consumer sector led to a reported 60% increase in instant delivery volumes. Cold chain logistics showed signs of recovery, driven by changing consumer preferences, particularly in e-commerce and retail. Government data has shown that India's fiscal deficit for the April to September period reached 4.75 trillion rupees, accounting for over 29% of the annual estimate. The financial year in India runs from April to March. Net tax receipts totaled 12.65 trillion rupees, 49% of the annual target, and up from 11.6 trillion rupees last year. Total government expenditure during this period was about 44% of the annual goal, similar to last year's 21.2 trillion rupees. Capital expenditure for infrastructure development was 4.15 trillion rupees, down from 4.9 trillion rupees in the same period last year. Australian consumer price inflation has decreased to its lowest level in 3.5 years during the third quarter. The latest data from the Australian Bureau of Statistics revealed a 0.2% rise in the consumer price index for the quarter, slightly below the forecasted 0.3% increase. Annual inflation fell to 2.8% from 3.8%, marking its return to the Reserve Bank of Australia's target band for the first time since 2021, a development that was widely anticipated. This decline was largely influenced by a significant 17.3% drop in electricity prices due to government subsidies, along with a 6.2% decrease in petrol prices. South Africa's headline inflation fell to a 3.8% year-on-year in September 2024, down 2 percentage points from August, marking its lowest level in over 3 years. Monthly inflation remains steady at 0.1%, continuing to trend below the South African Reserve Bank's target midpoint of 4.5%, which may signal potential policy easing before year-end. Food inflation paused at 4.1% year-on-year, its lowest level in 50 months, excluding July's figures.